Hello everyone and welcome back. In this video we are going to talk about 4 attributes of stocks that outperform the market. 4 things that some stocks have, some companies have, and most of the time these are winning stocks that outperform the market. Okay, so I will talk about specific examples, case studies, actionable steps. I will show you how to find the data so you can do this exercise for your own portfolio right now, like just after watching this video. And on the hunting process, when you want to find new opportunities, you can check these 4 filters so you can only find stocks that will outperform the market. In case this is your first video from this channel, welcome. My name is Christophe Noor. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year. And the goal with this channel is to help you find better stocks, outperform the market. So the first attributes that all the outperforming stocks have in the long term is a first basics filter of, I can tell you, 1, you want a positive and growing free cash flow. Okay, now let's filter out the companies that are unprofitable. In the investable universe, you have, fair enough, you have more than 50,000 stocks. How many of them will have positive gains? How many of them will go bankrupt? How many of them will outperform the market? I can tell you only a minority of the companies will outperform the market. And the goal of my channel is to give you the tools to find this minority of companies, this minority of stocks. So a simple process, a simple filter is to remove all the companies that are not producing any free cash flow, cash that is really produced by the company. So you want a positive free cash flow and you want a growing free cash flow. Okay, free cash flow is a simple metric that you can monitor from all the investing websites. You take the cash from operations minus the capex, capital expenditures for new facilities, new data centers, etc., etc. And I can show you on Fiscal AI how to find this free cash flow. Fiscal AI is a website I use on a daily basis, and you can use this website completely for free using my link in the description. You click on the link, you use the website completely for free to just try it out without putting your credit card. So I can make this example with MSCI, a company I know really well, and it's a company that is producing a lot of free cash flow. You click on financials, you click on cash flow statement, you scroll down, you scroll down, you scroll down. Here we go, free cash flow. You have a line, free cash flow. You don't even have to calculate it. You can see for the past 20 years, the free cash flow of the business. What can you see? 1, is it positive? Yes. You don't see any negative number here. 2, is it growing? Yes. You can see that over the past 2 decades, it has grown. The CAGR, so compound annual growth rate, so the average growth rate, is 17%. Over the past 20 years, the free cash flow has grown at 20%. By the way, if you want to become a better investor and improve your performance, I have a coaching program. It gives you the exact method I've used to generate 25% per year for almost a decade. More on that at the end of the video. So if you go back to our first filter, it is being respected. The second filter I have for stocks that outperform the market in the long term is the profitability and the gross margins and the pricing power. So how can I put it? Pricing power, PP, pricing power, and also gross margins. Pricing power is the ability for companies to increase their prices and customers stay. For example, some companies don't have pricing power. If you want to buy, toilet paper, and you have a brand that is increasing their prices by 50%, will customers really stay and buy the same toilet paper, or will customers switch to competitors, all the toilet papers with the same price as before? people don't care at all. Okay? So some things are commoditized. You have plenty of examples in the world for a table, for a chair. If the prices double in 1 year, customers are leaving for competitors. Okay? But there are some companies that have the ability to improve their prices, increase their prices every year, and customers will stay. The iPhone is a beautiful example. iPhones are maybe the perfect example of pricing power. I mean, Apple has been increasing their prices every year, tiny improvements every year, and people stay because you have such a powerful ecosystem. I'm using my iPhone. This is a MacBook. Everything is synchronized. Life is good. Life is wonderful. Things are working properly. I don't want to switch to competitors, and I don't want to switch to a Samsung phone, a Pixel phone. I'm good. And if there is a 10% increase in prices and I break my phone, so be it. I will buy another. I don't care. The price can be 20% high. I don't care. Okay, I will not even look at the price. This is the kind of pricing power you want to have when you invest in stocks. Companies that can increase their prices and still win their customers. Customers will not change, will not move away because the product is so good. The services are so good. You have a moat. So, how can you see if a company has pricing power? Either you can see the qualitative side, so where I just told you with the example of the iPhone. I mean, this is a common pattern. If your iPhone breaks, you just rush to the store to buy another one. You just don't think too much about switching. Most people stay with this ecosystem. Everything is fine. But also you can check quantitative metrics, and gross margins are a good indicator for this. So, how can you check the gross margins on Fiscal AI? You go here. You click on income statement. Here, gross profit margin. What can you see? You can see that for the past 20 years, the gross margins have been always above 50%. And they are increasing. 20 years ago, for MSCI, I'm using the same company for today's video. Gross margins were at 60%, and then 70%, and then 80%, and now we are high at a high plateau of 82%. So they have the ability to raise their prices, and customers will stay. We are talking about an asset-light business model. You have many indicators of pricing power, but this one is a good one. If you look at companies that are selling commodities or furniture, tables, a new bed, the margins are not the same. So MSCI is also a software company. Margins are high, but the point is still valid. A good indicator of pricing power is a sustained high gross margin profile. And MSCI has a high gross margin, but it is also increasing. So it's even better. Third attributes of stocks that outperform the market is the ability for companies to reinvest internally their capital and to grow. Okay, so you have many reinvestment opportunities, and every dollar that you reinvest inside the business is generating you a lot of free cash flow in the future. How can you judge this? How can you judge if your reinvestment rate is good or not? You have what is called the return on invested capital, the ROIC. You want a ROIC that is high. You want a ROIC above 15% for winning companies that will outperform the market. You want the ROIC to be not cyclical, and you want the ROIC to be high. So again, let's check for MSCI. The way to see the ROIC is you have to go to ratios. You have to go to something called efficiency, capital efficiency. Here, return on invested capital. What can you see? You can see that this trend has been growing, stable or growing. In the past, you had a ROIC of 6%, not good, and then 8%, increasing 12, 15, 30%. And now, for the past few years, we are at a very high level, a ROIC above 30%. You don't have cyclicality. Now you are at a very high plateau at 30%. And as the company is increasing their prices, getting more efficient, this trend at the moment is picking up again. You want this ratio to be above 15% for all the companies. You can check the past 5 years, 10 years, that's fine. You want to be invested in winners, and a ROIC is a good example. So now you have 3 attributes that will filter out the majority of companies. Out of 50,000 stocks in the market, how many of them are producing positive and growing free cash flow? How many of them have a pricing power with high gross margins? How many of them have a ROIC above 15%? You will remove like 80% of the companies. But there is a 4th attribute. The 4th attribute is insider ownership, IO. How many shares the CEO has? Do you have a lot of skin in the game for the CEO? And again, I can go back to my example of MSCI. MSCI is a very specific company because the founder is still the CEO, Mr. Henry Fernandez. And for the past 30 years, you have the same CEO, the same founder, the same guys here. So how can you see the insider ownership, the skin in the game? You can click on ownership on Fiscal AI. You see this line, Henry Fernandez, chairman and CEO, owns 2.9, so 3% of the company. You have a CEO that owns 3% of the company. And by far, it's the biggest percentage. Yeah, the second largest guy in terms of skin in the game has less than 1%. So he's the boss here. He makes the decisions. He makes the calls. You can check also the holders. You have Vanguard, BlackRock, State Street, Baron Capital. Henry Fernandez is here. He owns 3% of the company. Oh, that's here. He owns 3% of the company. That's a lot. You want insider ownership to be, I would say, above 1% is good. The higher, the better. If you have a CEO that owns 10% of the company, 10% is wonderful. For the MSCI, 3% is good enough. Because if the CEO owns a lot of shares, his net worth is linked to the stock price. So the incentives are aligned. If the stock price crashes, shareholders will burn and he will burn. So he has no interest of making stupid decisions. So actually having high insider ownership will reduce the number of mistakes from the management team. They will force, this skin in the game thing will force the CEO to think for the shareholders. Because he is a shareholder, so he doesn't want to burn. He doesn't want to bleed cash. He doesn't want the stock price to go down 50%. He wants the stock price to go up so he can get richer. And you too, because you are a shareholder. If you only invest in companies with this big skin in the game, with a high insider ownership, you minimize the mistakes. Because if you burn, the CEO will burn. If you die, the CEO will die. And the CEO doesn't want to die. Also, a second point you can check for this skin in the game is if the CEO is buying more shares. If the CEO is selling shares or buying shares, now for MSCI, the stock recently dropped as I'm recording this video. I don't know when you will watch this video. And the CEO just bought the dip, open market acquisition. A tiny bit of shares, but the direction is important. As the stock is dropping, the CEO is buying. Okay? You have the opposite situation when the CEO owns a lot of shares and the CEO is constantly selling shares. It's not great. Okay? It's not a selling signal. It depends on the size of the sales actually. But a very positive sign is 1, the CEO is the founder and he owns a meaningful share of the company. Okay? So MSCI is in this situation. And 2, the CEO is buying more shares as the stock is dropping. It gives you confidence, okay? Conviction, you are in the same boat. These are 4 attributes of stocks that outperform the market. You focus on companies that generate free cash flow, with pricing power, with efficiency, and skin in the game. If you like this content and you want to go deeper, I have a coaching program. In this program, you will learn my strategy to generate 25% annual returns. You will learn how to find winning opportunities. You will learn how to properly value any stock, when to buy, when to sell, so that you can build a strong portfolio filled with great companies. Additionally, inside this coaching program, you will have access to an exclusive community of like-minded investors, and also you will have my personalized guidance to reach your investing goals. Click the first link in the description to get more information. You will get a video that explains how everything works completely for free. No need for your email address, just click the link in the description and I'll see you on the other side.